accounting or tax? Which is which? At ano yung masusunod? Dapat ba tax before accounting or accounting before tax? So, well, sasagutin natin ang ilan sa mga katanungan regarding sa differences between taxable income and accounting income after this. Well, isa sa mga main issue dito sa tax income tax accounting is yung deferred tax payable. So, ano ba yung deferred tax payable? Ito yung differences dun sa accounting income saka dun sa taxable income. So, taxable income is not necessarily the same as yung accounting income. Ito taxable income, of course, dito tayo nagbabase ng babayaran natin ng taxes. Now, bago tayo magpunta sa further details, no? Ano ba yung mga companies or entities that are required to report yung or recognize yung deferred tax accounting? So ito yung mga first is yung mga publicly traded companies, no? Yung mga equity and debt securities is being traded in the local stock exchange or over-the-counter market. And the other one is that yung kanilang debt and equity securities are registered sa Securities and Exchange Commission. Now, bago tayo tumuloy dun sa further discussion, especially dun sa computation, ano ba yung pagkakaiba ng taxable income dun sa accounting income? Well, pag sinabing accounting income, ito yung kino-compute natin dito, yung sales less cost of sales, tapos less operating expenses, and then yung net income before taxes. Ito yung nag-a-appear dun sa traditional na income statement, no? Under the rules of accounting standards like PFRS. While yung sa taxable income naman, these are income na base naman doon sa authorities, sa tax authorities. So it is mandated under the tax authorities like sa BIR, no? And this one is computed by yung taxable revenues less taxable expenses, and then you get the taxable income, no? Which itong mga taxable expenses na to, these are allowed by the taxing authorities, no? Na hindi naman lahat na allowed doon sa accrual accounting ng financial accounting or ng accounting income. Now, there are differences between accounting and taxable income. So, these differences can be classified into two. Number one is yung permanent differences, and number two, yung temporary differences. Now, yung permanent differences, these are items of revenue and expense which are included in either accounting income or taxable income, but will never be included in the other. So, actually, itong permanent differences na to pertain to non-taxable revenue and non-deductible expenses. So, permanent differences do not give rise to deferred tax asset and liability, and they have no future tax consequence. So, examples of these include yung mga bank deposits and yung sa interest income on bank deposits, and yung dividend received, and yung life insurance premium. Itong dalawa, yung interest income on deposits as well as yung dividends received, these are final tax. So meron na silang 20%, yung number one, yung interest on deposit, meron na siyang 20% na final tax. Yun namang isa, yung dividend received by a corporation, no? Okay, especially kung domestic corporation, from domestic corporation to another domestic corporation is exempt from tax. So, yun naman premium for yung life insurance premium, when the entity in the in the beneficiary of a life insurance policy of an officer or employee, the premium paid by the entity is not deductible as expense for tax purposes. And said premium is an expense for financial reporting purposes. Ayan, so nagkakaroon dito ng permanent differences kasi iba yung treatment doon sa taxable income as opposed doon sa accounting income. And the last one is yung tax penalties, surcharges, fines, and non-deductible. In short, since yung permanent differences, it's either kasama dun sa accounting income or dun sa taxable income, wala siyang tax consequences. So hindi we won't account for the deferred tax or liability. Meantime, dito naman sa temporary differences, yung items of income and expenses are found doon in both accounting income and taxable income, only at different time intervals. So dito nagkakaroon ng temporary differences kasi meron time na kasama siya dun sa accounting income pero hindi siya kasama dun sa taxable income. Example, yung mga accruals, no? So we recognize income kahit hindi pa natin nare-receive yung cash, no? While dun naman sa taxable income, pag na-receive na yung cash, regardless if this was already earned or not, no? As well as yung dun sa expenses, kung na-incurred man or hindi. Now, dito naman, so nagkakaroon tayo ng tinatawag na temporary differences, which is either deferred tax asset or a deferred tax liability. PAS number 12, paragraph 15 provides that a deferred tax liability shall be recognized for all taxable temporary differences. Deferred tax liability is the amount of income state tax payable in future periods with respect to a taxable temporary difference. Ayan, so taxable temporary difference is the temporary difference that will result in future taxable amount in determining taxable income of future periods. So mamaya ipapakita natin na yung hindi taxable dun sa particular period na yun, let's say sa year 1, then magiging taxable, dun pa lang siya magiging taxable sa following year. So ito yung mga temporary differences. So a deferred tax liability arises when accounting income is higher than taxable income because of future taxable amount. So when the accounting income is higher than the taxable income, then nagkakaroon tayo ng tinatawag na deferred tax liability. Now, under deferred tax liability, nagkakaroon tayo ng ganon pagka, let's say, yung installment sales. Now, under the accounting standards, no, we recognize already yung revenue or yung sales, no, when the sale is made, hindi kung kailan natin na-kolekta, no? This is under accrual. Pero doon naman sa taxable income, i-recognize lang nila yon, no, once na revenue pag na-kolekta na nila. So halimbawa sa year 1 wala pa na-kolekta, so mas mababa yung taxable income kaysa doon sa accounting income. So yung tax nun yung revenue niyon in the future pa, kahit na mas malaki yung accounting income natin. So kaya tinawag na deferred tax liability. Or another thing is yung sa expenses, no? Let's say merong prepayment, no? Let's say sa renta, no? Merong prepaid. Now, yung prepaid na yon sa accounting, that is an asset and that i-expense lang natin yon once na incur na natin yung rent. Pero dun sa taxable income, once na binayaran na naglabas na tayo ng pera, no, regardless if we have incurred it or not, no, under yung cash basis, that becomes already a deduction sa revenue dun sa taxable income. Kaya mas lumiliit yung yung taxable income natin because of that deduction. So ito, nagkakaroon tayo ng tinatawag na temporary differences, which is itong deferred tax liability. So we will give some illustration on that one in a little while. So gawin natin to para to reinforce what we have learned kanina, no? So dito naman magko-compute tayo ng deferred tax liability. So in 2020, an entity reported an accounting income or gross income on installment sale of 1 million pesos, but not in taxable income. So sa madalit salita, mas malaki yung accounting income niya, which is 5 million, kaysa dun sa taxable income niya, which is only 4 million. So this temporary differences is expected to be reported in taxable income in 2021. So kaya makikita natin dito, mas malaki yung taxable income niya kaysa dun sa accounting income. Dito naman, mas malaki yung accounting income. So the income tax rate is 30% now. So gawin natin dito, no? Yan, itong ano na to, no? Incidentally, this is the corporate rate also, no? So to record the income tax expense, so magko-compute tayo dito. So we will ito muna i-recognize muna natin ito based on the taxable income. So lalagay lang natin dito income tax expense. Income tax expense. Okay? And yung credit niya would be income tax payable. Income tax payable. Okay, so we will compute for the amount of this one. So this would be, based on this one, this is 4 million times 30%. So ito yung magiging debit and credit niya. So this would be the debit and the credit. Okay, so let's compute for that sa ating mahiwagang calculator na isang tingin pa lang makikita mo na kung magkano. So this would be 1,200,000. Ayan, 1,200,000. Talaga nagko-compute tayo. Ayan, papakita ko pa sa inyo. Ayan. So may calculator naman sa cellphone natin. Okay, so and yung defensive accounting income tax payable, that's 1,200,000. Kailangan para sigurado may calculator ka. Okay, so and then yung ano natin, yung next naman natin, no? So this is to record yung deferred tax liability, to record the deferred tax liability. Okay. Kasi nga nakabase tayo doon sa sa taxable income, which is mas maliit kaysa sa accounting income. So nagkaroon tayo ng deferred tax liability. Itatax pa siya sa 2021. So this would be debit income tax expense, so additional income tax expense. Income tax expense. Okay, so this would be, blanco muna natin yan, and deferred tax liability. Yan. So deferred tax liability. Okay, so to be taxed in the future, not in 2020, no? Okay, so this would be 30%, no? So of yung difference between the accounting income and the taxable income. So 1 million yung difference nila. Okay, times 30%. So this would be around 300,000. Yan. So wala nang compute yun. Kita naman. No? Lalo na kung hold naman yung if it's 1 million, madaling computein. Okay, so that is 300,000. No? Yan. Okay, so actually here's the total income tax expense na ginamit natin is based on the accounting income. So, ipa-plot lang natin dito. So, this would be the total income tax expense. So, ang computation yan is this one. So, this would be 5 million this one, the accounting income, 5 million times 30%. So this would be, of course, this would be 30% of 5 million, that would be 1,500,000. And 1,500,000. Now, ili-less natin siya dun sa tax payable. Okay, so dun sa current tax expense. Ito yung nirimit natin sa BIR. So this one is the current tax expense. Okay, so ang basis niyan itong taxable income. So this would be 4 million times 30%. Okay, so this would be 1,200,000. Okay, so yung difference nito would be the deferred tax liability of 300,000. So this one is to be paid the following year. So this one would be the deferred tax liability. So deferred tax liability. And so yung mga nag-report na they want yung legal na paraan na para makapag yung mga ma-delay yung taxes. So this one is one of the legal ways of computing for the tax payable. Now, ito pa yung yung sa presentation naman, yung dito sa of course we're not going to discuss yung mga legal or illegal, no? We're more dito muna sa accounting, no? So meron din akong incidentally yung mga tax na videos, no? If you want to check it out, no? So I also place some videos here dito sa within this some links. Okay, now dito naman yung naman natin, no? So we will go dun sa presentation of the income statement presentation for 2020. So the income before income tax, that's 5 million. This is the accounting income. And then isulat mo doon yung income tax expense deducted by the income tax expense. So ano yung composition yon? Yung current tax expense of 1.2 million plus the deferred tax expense, so a total of 1,500,000. Now this 1,500,000 is to be deducted doon sa income before income tax na 5 million. So you will get a net income of 3.5 million. Ayan. So moving forward dito naman sa 2021. So since tapos na tayo dun sa 2020 yung journal entries, no? So ito naman dito naman sa 2021, the following year, dito na matatax yung na-defer na liability, tax liability. So first is to record the current tax expense. So laging ang basihan niyan is yung nandito na tayo, by the way, yan. Ang basihan niya lagi is yung itong taxable income because ito yung nire-remit sa BIR. So this would be 8 million times 30%. That would be the income tax expense for this is for okay, so 2,400,000. So 2,400,000. And then forced credit 2,400,000. There. And then yung next entry naman is to record the decrease of the deferred tax liability kasi nag-reverse na siya. So kung mapapansin natin yung difference itong dalawa is 1 million, no? Napasok na, itinax na siya dito in 2020. Yung 1 million na yun nakasama na dun sa 8 million. So i-reverse na natin yung tax liability. So by reversing, ibig sabihin nabayaran na natin yung tax liability. Okay, so that would be this would be yung 300,000. Remember, ito yung record natin doon sa previous year in 2020. There. The next one is yung computation of the total tax expense. So total tax expense. Now this is based on dito sa accounting income. So yan, so this is 7 million. Yan, 2021, so 20. So ito na tayo, no? So this is 7 million times 30%. Okay, so that would be 2,100,000. This is 2,100,000. Now, this would be minus, no? I-less to dun sa current tax expense. Now, the current tax expense, ito yung nire-remit dun sa BIR. Current tax expense would be 8 million. This is 8 million times 30%. There. So this would be 2,400,000. Okay, so makikita natin meron 300,000 mas malaki yung current tax expense dun sa total tax expense, no? So that's why there is a decrease in this one is the decrease. Okay, so I hope you can see it there. Okay, so this one is a decrease in deferred tax liability. So this deferred tax liability, and so this is for 300,000 there. Makikita natin the reason why decrease in deferred tax liability kasi binayaran na natin siya dito sa current tax expense of 2.4. That's why bayad na tayo doon, so doon sa liability. So pag nag-decrease yung liability natin, di ba normally dinidebit natin. Okay, so this one is the income statement presentation, so for 2021. So income before income tax, that's 7 million. So ito pa rin yung accounting income. Now, i-deduct natin dito yung income tax expense for 2021, which is the current tax expense for 2.4 million. Tapos ililess natin yung decrease in deferred tax liability na 300,000. So kukunin natin yung difference. So that would be 2,100,000. Now from there, ima-minus naman natin siya dun sa 7 million na income before income tax. So we will have an adjusted 4.9 million net income. Now let's talk about yung deferred tax asset naman, no? Now, in contrast dun sa yung kaninang pinag-usapan natin about deferred tax liability, dito naman meron naman tayong deductible sa in the future against dun sa sa taxable income. So ito yung normally yung sa mga net operating loss carry forward, so pwedeng i-deduct yon. Now under PAS 12 paragraph 24 provides that a deferred tax asset shall be recognized for all deductible temporary differences and operating loss carry forward when it is probable that taxable income will be available against which the deferred tax asset can be used. So, in other words, a deferred tax asset is the deferred tax consequence attributable to a future deductible amount in operating loss carry forward. Itong temporary differences na to na yung taxable income mas mataas siya doon sa accounting income, nagkakaroon ng deferred tax asset na pwede siyang deductible in the future. So halimbawa yung pagdating doon sa revenue. Now let's say yung prepayment sa rent. So halimbawa ikaw yung lessor ka, tapos nakatanggap ka ng ng bayad ng advance. Now under sa taxable income, kasama na siya as revenue. So itatax na siya. Pero dun sa accounting income naman, since siya under accrual basis, so i-recognize lang natin siya as a revenue once we have earned it. Pagka yung lessee o yung umuupa is na-consume niya na yung time period na yon. So that's the only time that we will recognize a revenue maybe in the future, no? So itong na to, so tinatax tayo dun na ngayon ng mas malaki kaysa dun sa accounting income. So na pwede nating i-deduct naman in the future. Another thing is yung sa mga expenses. Now sa mga expenses, halimbawa yung mga doubtful accounts, no, yung mga accounts na hindi makokolekta, no, yung parang allowance for bad debts, deductible na siya as yung bad debt expense dun sa accounting income, Pero sa sa taxable income, madideduct pa lang siya pagka worthless na yung collectible or pagka hindi na makokolekta. So in other words, parang write off na saka pala siya i-deduct. So kaya mas mataas yung taxable income kaysa dun sa accounting income. So i-take up naman natin ito para to reinforce our learning. So in 2020, an entity received an advance rent payment of 600,000, which was subject to the tax but not reported in accounting income. So makikita natin mas malaki itong taxable income niya kaysa dun sa accounting income. So may tax lang yung 600,000 difference, yung 600 difference na yun, o mai-include lang yung 600,000 difference na yun sa 2021 dun sa accounting income, pero ita-tax na siya ngayon because of the taxable income. Dito ang basihan ng bayaran sa tax. So the income tax rate is 30%. So as we can see here, so in 2020, so this is the accounting income, so 5 million, and then taxable income for 5.6 million. So the journal entries for 2020, so number 1 is to record the current tax expense. So of course, base ito dun sa BIR taxable income, so debit income tax expense and income tax payable. So this would be 5,600,000 times yung corporate tax rate of 30%, no? So that would be that would be 1,680,000. Okay, so this is 1,680,000. And then of course yung yung income tax payable is also 1,680,000. So mas malaki yung tax na binayaran niya kaysa dun sa dapat na, kasi malaki yung because of the taxable income na nakasama na doon. And dito naman sa deferred tax asset, no? So yung difference nitong dalawa, which is 600,000, these temporary differences, no? So this multiply lang by 30%. Okay, so we will get 180,000. So this will be a tax benefit. Okay, para siyang prepaid, parang binayaran mo yung tax ngayon taon, pero pwede naman siyang i-deduct doon sa taxable income in the future. So this is 180,000 also there. Okay, so kukunin natin yung difference itong dalawa, yung total income tax expense. So the computation here is based on the yung accounting tax na 5 million times 30%. Okay, so this would be 1.5 million. And yung isa naman, yung dito naman, yung current tax expense, this is the tax payable, no, sa income tax. Okay, so this would be 30%. This would be 5.6 million. Okay, times 30%. So this would be 1,680,000. Yan. So ito yun, no? Okay, so yung difference niya is 180. So this 180 is the deferred tax asset na pwede siyang deductible in the taxable income for next year. So deferred tax asset there. So parang prepayment siya. Okay? So let's go now dun sa 2021. But before that, tignan muna natin yung itong income statement presentation. So as you can see, the income before income tax, that's 5 million. So ililess lang natin yung income tax expense. So muna yung composition niya, yung current tax expense, which is 1,680,000. So ibabawas natin, mapapansin mo na mababawasan natin yung income tax benefit, yung temporary difference na yon, para so kunin natin yung difference. This is 1,500,000. 1,500,000. So ang net income, ito yung sa ito yung sa lalabas doon sa accounting income, 3,500,000. This time para naman doon sa 2021, yung journal entries to record the current tax expense. Of course, the basis niyan itong taxable income, which is 6,400,000 times 30%. So this would be ganun lagi, always yan. So magkano yung lalabas? So this would be 1,920,000. So 1,920,000. So base ito doon sa nire-remit sa BIR, which is the taxable income. Yan. So, and then of course, since nagamit na natin ngayong taon yung tax benefit nung last year, so i-debit natin dito yung 180 kanina, magiging expense na siya ngayon, and credit, so babawasan natin. This is to decrease the deferred tax asset kasi ginamit na natin for this year. So the computation here is 7 million times 30%, that would be 2.1 million. And then yung yung current tax expense, which is 6.4 million times 30%, Okay, so this would be 1,920,000. So there is a decrease kasi mas mababa yung taxable income ngayon kesa dun sa accounting income. So this would be 180,000. Yan, so so this would be the decrease. Okay, decrease in deferred tax. Okay, so deferred tax asset. Okay, it's for 180. Now, the income statement presentation, as we can see. Okay, so income before income tax is 7 million. So ilaless natin yung income tax expense para ngayong taon. So current tax expense, which is 1,920,000, and then i-add na natin yung decrease in deferred tax asset. So a total of 2,100,000. And then para makuha natin yung net income na 4,900,000. So this will appear dun sa income statement, so accounting income. So if you have any questions or any comments, please write down your comments there, and any suggestion for a topic you want to discuss in the future. So just write down your comment. Of course, subscribe, share this video, and like. So God bless, stay safe, and keep your hands clean.